Welcome to the Real Estate Power Play Podcast, your launch pad for skyrocketing success in real estate investing. I'm your host, Gabe Rodarte, alongside Mark Monroe. We're ready to bring you transformative stories, groundbreaking strategies, and the insider secrets of real estate giants. Get ready to accelerate your investment journey and become a true power player in the world of real estate.
Okay, welcome to another episode of Real Estate Power Play. This week, as you guys know, I'm Mark Monroe. And if you like what you hear, please share, like, and just share it around with everybody you know. And if you have anything that you want us to go over during one of our podcast topics, please post it below and we'll be more than happy to kind of jump out. But I'm excited this week. We have Alden. Alden, how you doing?
Doing great. Thanks so much. Blessing to be on the channel today, Mr. Monroe. So appreciate the opportunity.
Well, yeah, we've networked a few times at some different events, mainly the seller financing note conferences throughout the country. And I actually flew out to Arizona and met with you and your father and looked at one of your operations. I know you have quite a bit of stuff going on. And first of all, why don't you tell everybody a little bit about yourself and what you're doing, and go ahead and do an introduction.
Absolutely. Yeah. Well, I'm Alden Guajardo. I'm actually president of 506C Reg D Silvercrest Opportunity Fund, as well as started as Win Mobile Homes. Win Mobile Homes is the largest dealer of manufactured housing here in Arizona. We've been operating on a fix and flip strategy, seller financing manufactured housing, and raising private capital for those positions. We've done about 300 transactions here in the local market of Arizona, kind of emulating a Warren Buffett investment strategy. But being in business about 8 years, we built up a great brand, Win Mobile Homes, license 8670. And as we seller financed more manufactured homes, we had to figure out how to do notes properly, right? So as came on the note education and how to properly do those items, raising money for performing notes, and then started the fund. So we've done, $10 million in first lien performing notes in manufactured housing here in the Arizona market at a 2% default rate, and enjoying that business in itself. Why? Because affordable housing is a state of emergency, and manufactured housing kind of fits that avenue. So blessed to be here and offer the opportunities that we have. That's just kind of how we got started. From my young age, I was evaluating foreclosure homes and negotiating with the tenants that were going to the bank house steps from my father, who has long time development, fix and flip, wholesale strategy in my back pocket. So family business here today. We've done 300 doors or more here in the Arizona market, and we're actually branching out to some other avenues we can talk about today.
Nice. That's just a little bit that you're working on.
Yeah,
That's a little bit
exactly.
of mouthful. So that's awesome. So when did you personally get into it?
Yeah, so 8 years ago, I pivoted and started attending Arizona Real Estate Investors Association. Really kind of trying to figure out the market, figure out where I would lay my hat at, and where the biggest area of opportunity may be. Opposed to just becoming an agent or trying to wholesale, properties, is really trying to figure it all out. So 8 years ago, walked into Azria. There was an individual that was buying mobile homes to sell them to California mobile home park owners. So he's buying it, having a transport guy make his fee, and selling it, to move across state lines to another park, where we saw a modified program of buying it there, rehabbing it there, seller financing it there as a fix and flip strategy, and started gaining traction. Until we started seller financing, we were doing, a few at a time. There wasn't that many people that could buy a mobile home for cash. Historically, people need financing for a purchase, and there's not that much financing. So as the envelope unfolds of business, we had to get nimble throughout what we heard of a hardship, right, of homes in dilapidated condition that needed either to be moved or actually refurbished in its current position and then offered for sale. So as that developed, we got nimble in the notes strategy, and that just kind of was off to the races at that point, all from a meeting at Arizona Real Estate Investors Association.
So uh, we totally, most of us, we all get the fix and flip model. It doesn't matter if it's single family, mobile homes. We kind of get that. It's great that you get those and you flip them. But how did you guys come together and decide to put the seller financing model piece of that? Because that's pretty fascinating.
I think really from me remembering like 7 years ago, we just got asked. We got asked more times than not. People didn't understand where they could get financing from. And at that point, it was tough to get off transactional income with our investment partners to a long-term note. So it took some real education at that point from outreach of individuals like, hey, I'll pay this amount monthly, figure out the interest rate, we'll put a down payment. Once we figured out that that was an issue of converting additional transactions, that's really where the rubber met the road about 7 years ago. And obviously, that came with formal education and learning how to properly do a seller finance note, underwrite them, use a mortgage officer and things of that nature. But really, out of hardship of us not being able to transact a home became one of the bigger areas of opportunity, seller financing that home at an affordable rate with skin in the game from the borrower that actually qualified through underwriting, creating a bank quality position. At that point, we really started doing more transactions, acquiring more inventory, and attracting more capital, at that point.
Nice. So you said something there, and I want to back up briefly because a lot of times people, investors or people kind of starting out, you mentioned loan officers, and a lot of times these people are not aware of the consumer protection regulations and everything. So why do you guys use a loan officer when you're putting your people into your properties?
Yeah, great question. It's a compliance item at the end of the day. There's a proper way of doing things if you're going to hit terminal velocity at the end of the day. So, I think it's five now. You can seller finance a year. I forget the exact number because they increased it from three. They were trying to get up, towards the double digit numbers. I think at one point that hadn't happened. But in order to properly get ability to repay, make sure that buyer can actually qualify for that transaction, opposed to just writing it down on a piece of paper, and saying, "Hey, we're going to give you a loan." This is actually a third party registered individual that actually verifies the information, deals with the borrower, and actually mitigates the investor's risk. Right. So not only did they go through formal qualifications, now we've met all of the necessary disclosures, putting up a wall now between the bank, the lender, right, and the borrower. So it becomes that much more of an institutional investment.
Yeah, and another reason why I want to touch base on that, because some of you guys listening to us and you guys are new or you're doing wholesaling, you're just starting out in seller financing, there is consumer protection regulations that you have to be aware of. That's kind of why I touched it, and you guys are doing it the right way. And bottom line is you need to make sure they're affordable. You're not taking advantage of that person. And also, when you do it, especially when doing seller financing, when you sell that note off into the secondary market, the buyers are going to want that required. Otherwise, they're going to beat you up when you sell that note off, right?
Yeah, it's, getting par free. It's a difference between taking less of a discount and more of a discount, or having people come back to your well of deal flow and not coming back to your well of deal flow. At the end of the day, we've had to learn, all new strategies and new things come with new struggles, hardships. But that's why attending, even these national note investment conferences from Diversified Mortgage Expo, the Note Expo, Paper Trail, and a few others in order to get your formal due diligence check boxes to verify those items. And at that point, you're facilitating a bank quality position, literally becoming the bank in a position. And our notes happen to yield higher than traditional real estate investment strategies, and yield on residential notes. So all the above, this all came from true, hardship and education, niche market knowledge, meeting Mark Monroe at Diversified Mortgage Expo and watching his stuff, all the above.
It's awesome. Now, Yeah, I like Nathan. If you guys ever have an opportunity in Nashville, I highly recommend going to the Diversified. Usually June or July in Nashville is a good time. And then we also, are you going to the one in Dallas coming up? No Expo, was that the first weekend in November, somewhere around there?
Yeah, so my sister happens to be getting married, I think the day before or the day after. So a little preoccupied, unfortunately.
Mhm.
Our licensed mortgage officer happens to be marrying my sister. So,
Wow.
keeping it close in the family. Sometimes it's right under your nose and you never realize it, at the end of the day. But yeah, we'll actually be also at the Alt Asset Summit here this month, here in Scottsdale, Arizona, put on by Directed IRA. But we try to frequent any and all of these real estate investment conferences. I've heard of what's it called? Dealmaker in Dallas is a big one. I'd like to attend that one day. Really for me, I'm trying to figure out how to get out and meet more accredited investors and private lenders, and through social media to doing interviews on site, at these various events to, marketing strategies and geo-fencing the area, going social media guerrilla marketing and actually being at the event and talking to seasoned professionals such as yourself. We're trying to hit every major vertical right now, as we're originating now a new $50 million. I think we're doing $100 million tranche of second lien notes on single family residents in Texas, Florida, Georgia, the Carolinas, and Arizona, where the second lien on single family residents and new debt doesn't exceed 65% loan to value. So sufficient equity cushion to provide our investors, our passive investors, low risk real estate investment strategy and liquidity in like 1, 3, and 5 years within the fund. So those positions, we're getting like 20 a month right now. And through a HELOC program with a licensed mortgage officer that will process that actual note, that becomes a much larger equation, and a scalable opportunity. We love manufactured housing and love, building out that platform. We could 10x our business just being here in Arizona. But as a negative connotation comes in manufactured housing, it really takes an individual to come out, touch it, feel it, check out the program, understand the market, how 10% of housing of manufactured homes is actually 10% of mobile homes in housing in Arizona. So vast availability to continue to cultivate that business, and the plate's full at any given time. But we've instituted another division to be able to scale a private lending component and provide our investors the availability that if it goes non-performing, that second lien position on single family residence, we just pay off the first, pay off the second with a fix and flip loan of one of the 10 various hard money lenders that we've come across, pay them all off, right? And fix and flip the property for an additional profit. So multiple areas of immersion in notes. For me, we started cultivating that education about 6, 7 years ago, from meeting SEC arbitrators to meeting Russ O'Donnell, who used to own Called the Underwriter, to now Dan Deppen, who owns Called the Underwriter, to talking with Eddie Speed and Mark Monroe and the Note Investor University fellas, Desi and Patrick, to Kevin Shortell. The education and co-adjacence of branding has really escalated us and attracted new areas of opportunity, new education, and new high level raises for individuals, to participate. So, we're just happy to ride the wave right now, and be on these various podcasts. We're doing a lot of vlogs. I think I have 807 videos on YouTube right now. So we're trying to get up to the million views a month, like Mark Monroe is getting on his seller finance Facebook group. So we'll give you a quick shout out for that for sure.
Yeah, so yeah, I'm not going to make it to Eddie's as well. I'm going to be out of the country. I'm actually leaving next week again, heading to Greece for a long weekend, and then home for a
Nice.
little bit, and then we head out again. So it's always a good time. I highly recommend you guys, if you're in Dallas, to get out to that No Expo event. I think it's early November. We'll post it in the seller financing group. Yeah, but yeah, that group is just that seller financing group just blew up. We're definitely well over 1 million a month people just going through that whole process. I think we're
Wow.
almost a couple of times we hit over 2 million. So, but that's great. And so I want to talk about you a little bit, like, because I know you're really big in real estate and you're doing a lot of content. Like, tell me a little bit about what your content looks like. What makes you're passionate about that, and then how's that helps you grow in your business?
Yeah, so I started vlogging like 2.5 years ago, just to kind of document process. I always liked seeing people doing cold calls and, kind of videoing that, getting some negotiation in play, really kind of more education based on how we do transactions, be more transparent to the people that are interested in possible available opportunities that we have. Because I can only touch so many people physically at these various events. For them to actually sit down for 5 minutes, and understand what we do, it was a challenge. And, I'm a younger individual. I started this business as a 23-year-old, gung ho individual. Uh, but, through providing diversity through vlogs and various educational content on how I was figuring out the business, literally, to walk through videos, to negotiating with clients via meta glasses, to interviews now at these various real estate investment conferences. That one actually, after bridging, some unprofessional vlogs of not so much high level content, it's just me kind of talking to a camera, to graduating to a more professional interview with a co-branded of the conference. That one specific item has actually garnished us multiple millions of dollars of organic capital investment through adjacent branding, right? So, ultimately we would, in more times than not, trade for credit for a booth, bring the lights, bring the $7,000 camera, and have real investment discussion opposed to, just light-hearted questions, kind of what do you see in the industry? Really education based with intellectual individuals and major players. So that one aspect alone, jettisoned into us starting a mastermind weekly, every Thursday at 12 o'clock Pacific time. That's free, where we bring our deal flow to the table and talk about it and have open discussion. So from negotiation videos to, walkthrough videos to client testimonials, investor testimonials, live deal flow, interviews at conferences, really trying to hit the bigger pockets wave, if you can't feel it yet. And we're not quite on that level. Shout out to thicker wallets coming soon. But yeah,
I
that's
like
kind of
it.
the different stuff someone can expect from viewing the content. We've thought about starting an education platform and selling education and stuff like that. But really, I'm looking more for capital partners. We're a capital raising program right now, for the available opportunities that we have. And that's how we're leveraging our media, all into that accord.
So let's talk about that a little bit. Thank you for sharing that. That's really informative. But let's talk about the capital partner aspect of it. So I know you do the notes, you sell notes, but you also about the fund. Why don't you touch base on both of those, if you don't mind?
Yeah, so through mobilemailboxmoney.com, one investor can buy one note and participate in as little as a 30-day program. Those are first liens in manufactured housing, 20-year AM, non-fluctuating interest rate at a double-digit yield. They can buy that note for the full term and make the full yield, or I hypothecate that one note to one investor for a 1 year term at a double-digit interest rate, and they become a vested qualified partner, within that one note. And actually, a non-accredited investor can buy a note, even off like paper stack, stuff like that. But that's mobile mailbox money. So the note investment platform that we've cultivated.
So before you jump ahead, you said the word hypothecate there. Why don't you explain that a little bit, what that means to the listeners?
Yeah, so that means to pledge an asset in order to garnish capital investment. So I can take that lien position, right, and raise dollars for that lien, right? I'm not taking a personal loan or anything like that. I'm pledging that lien position to a collateralized lender who wants collateral out in the market, but doesn't want a full AM of a seller finance note, right? That term's 20 years. That's a long time to hold a note, and if you're not a note investor, or not seasoned how to flip paper, that's a great opportunity for someone to participate with like a year of liquidity. And 9 times out of 10, that lender who's the hypothecated lender, almost like a Morby situation, but he's having a yearly call, of liquidity, they end up staying in the note, multi-years, but they love getting the call, at the end of the day.
So in a sense, you're selling a part of your note that you own to another investor to get some capital in a sense. That's kind of in a
Correct.
nutshell. Okay.
Exactly.
Cool, cool. All right, thank you for sharing that. All right, so we already touched so they can go to your mobile mailbox money to kind of learn more about that. Now let's talk a little bit about the fun aspect of it.
Yeah, so we're about a year and a half into the fund. Blessed to be a hedge fund manager with, 100 years of real estate expertise in my back pocket. We started the fund in raising for the notes that we originate on manufactured housing. And currently, 506C Reg D, we're offering a 1 year term at 10% net paid monthly, a 3 year term at 12% net paid quarterly, and a new 5 year tranche at 14% paid monthly. And that's a $50,000 minimum. At 50 to $1.5 million at a time, we could take capital infusion immediately and start deploying and earning interest in as little as a 30-day program. With these new opportunities and our success in private lending, seller finance, real estate notes, manufactured housing, we now have a 50 to $100 million play going on in these second liens where Silvercrest will hold the lien position and on a second and originate with a per unit owner share of accredited capital, depending on what benchmark they hit, as a open-ended HELOC, which actually subverts a lot of the need of a true traditional second lien mortgage. It's a collateralized private line of credit where we use a mortgage officer to originate the note, and we, cash flow on high equity cushion, single family residence in desirable areas. So, newly kind of coming out the woodwork here.
Got it. So that's now you can do those on for investors, not owner occupied, right? Investment properties, those seconds.
So those seconds will actually be owner occupied. So they'll be
Okay.
framed as an owner occupied asset based second lien on the property. So we use a licensed attorney and a licensed title office in order to facilitate that the first doesn't have escalation clauses and that the individual, is actually being truthful in the loan to value and things of that nature. We'll get a BPO, have a mortgage officer originate the note to fit compliance, and we're off to the races.
So it's got to be their primary residence then.
Correct.
Got it. Okay. That's good to know. So, all right. That's definitely good to know. And do they go by credit? Do you have any idea what the guidelines are for that? I know you
Yeah,
said the
so
BPO and 65%.
we'll pull all of their personal information, but ultimately it's an asset-based loan. It's purely on the asset. These individuals are trying to refinance to pay off either credit card debt or they're going to foreclosure, where they have, say, 30% loan to value currently in their property. They may have a 3 to 5% mortgage, which is literal gold out in the marketplace. And they're looking to just stay in the home at the end of the day. Our objective is never to take the house back. That's really the goal, to keep these people in the home, have them refinance at one point, once they get up on their feet. And if they do end up falling behind, we've even gone as far as have upfront conversation with the homeowner. Hey, we'll JV with you if you end up can't afford these payments in order to mitigate any potential claim from the homeowner, making it a true win-win for every party involved.
Nice. Okay. What kind of, I'm assuming for the investors, what kind of like rate does that look like? And what's that kind of look like a little bit?
Yeah, so it's contingent on usury in every market. A few of the markets that we have originated in or are talking about doing these deals are about 18% interest only, where we originate those positions and raise at less than what we lend at. On those benchmarks, 1 to 5 years. I know Georgia is a little bit less. It's like 16%. Texas and Arizona and Florida are all kind of mimicking the same environment and as long as it's agreed upon in writing, and the borrower can afford those payments, that's really where the rubber meets the road. Usury is of utmost importance. There's a proper way of doing things at the end of the day.
Got it. Now you talked about the fund for a second. Where would people go to get some more information regarding the Silvercrest Fund?
Yeah, so we originated the fund from a vestor, and we actually have almost like an online brokerage account. So if you go to silvercrestopportunityfund.com or silvercrestopportunity.com, you can log in, create an account on the portal, right? See and review the private placement memorandum, choose your case specific term, lockout period, and return, right? Sign that deal disclosure. You've verified your accreditation within the portal. And once we verify your accreditation, you upload your ID to verify your identification. At that point, you see the PPM. Take that upon your review. Sign, execute, take your term, and send a wire at the end of the day. And that's all fully compliant 506C Reg D offering.
Got it. So, let's explain what a accredited investor is. Why don't you kind of give a quick background on that?
Yeah, so an accredited investor is $1 million in net worth, excluding their personal residence. I think they get like 30% possibly towards, I'll have to validate that, but I always exclude it anyway in the conversation. Or $200,000 a year in net income singular, $300,000 a year in husband and wife. So, all of that is verified third party. I don't have the availability to personally verify that. We have the portal to do that actually. So someone can log in, upload 2 years of tax W-2s or whatever tax documents they require at that time, or you can get a letter of accreditation from your banker or your CPA that will verify that, and then we're off to the races.
Oh, okay. Wow, that was a lot that we just took in such a short period of time. So that's great. So is there a question that I did not ask that I should have asked?
Why is this an opportunity right now? Why are we even here talking about this? I think that there's a lot of hardship and scarcity going on in the marketplace and some element of fear mongering, with pressurized residential real estate pricing, you fluctuating interest rates, everyone's standing on glass waiting for Jerome Powell to additionally reduce rates 3 times by the end of the year. Who knows if that's going to happen at the end of the day? As we talked about previously, some multifamily seeing some true hardship,
Oh yeah.
and where's the rub? Where's an investor to go for an income at the end of the day? We can't all just rely on Social Security or fluctuating stocks that make us age every time we close our eyes. I think that now is a better time more than ever to expand private lending. And I'm relatively new to the market, being 31, but we are almost have no choice at this point, to pivot and get creative about the available opportunities and how to actually make it profitable. So, with a private lending component, lien positions, collateralized lending, underwritten qualified assets, to me just seems like a great corner of the market as alternative investments are being Googled now more than ever. And our president just issued a executive order to open 401ks to alternative investments, where historically you had to have a self-directed IRA. So we're seeing through the veil here. At the end of the day, this is truly the edge of someone's portfolio that wants to insulate outside vanilla investments in BlackRock and Vanguard and State Street that are worried about the market and still need the income they need in order to go live the life that they want to. That's why I think this is an opportunity, and we're even sitting here today.
Yep. And you said something there where a lot of people don't realize this, that you can use an IRA to be able to do some investing. Once you touch base on that just a second, and I know they're gonna be opening up to the 401ks at some point. I know there still needs to be a little bit of tweak in there because I reached out to Charles Schwab. I'm like, hey, I got a solo 401k. I want to start. Oh, we're not ready quite yet. There's still some little bit of but it's coming. So that's awesome. And once you talk a little bit about that, so a lot of people don't even realize that they could use those investment vehicles to invest in other.
Yeah, so notes, private lending, fund investments, syndications, as long as you don't have a personal interest in that property, you don't live in the house, or you're not renting it back out from yourself, you can divert your IRA investment tax deferred or tax free into these positions, actually seen on mobile mailbox money or Silvercrest Opportunity Fund. And that's done through various IRA custodians. If you have money in an IRA, it takes about 2 weeks to set up an account with somebody like Directed IRA. And 2 weeks from then, you actually have access to that capital to start making either acquisitions, lending, or making fund investments. And that's actually a fully qualified program. You can actually buy a note with your IRA, and most people just go with what the FA is going to say at the end of the day. They're pushing their vanilla investments. They don't really ask too many questions. But what's an interesting fact is I think it was like the top from $3 to $5 million were 40% of alternative investments in notes, private lending, and things of that nature, where the retail investor really just doesn't know that they can do this kind of stuff. And it's a lack of education. And I implore you, check out Directed IRA stuff online. They got so many different education videos, and they have their Alt Summit here this month, unfiltered value that they provide over there to just really get to the want for financial freedom and retirement savings.
Yep. Nope, that's great. And you mentioned something earlier, and I second that, is about, another social security. That's why I love notes. Like, I like buying properties through seller financing, selling it through seller financing, creating the note, creating the arbitrage coming in. So that's that's the go-to. You want that passive income. And but this was great. I really, really appreciate it. This was a lot of information. Again, why don't you give everybody, and we'll also post it below in the comments wherever you're listening to this, your links. Why don't you kind of tell everybody a little bit one more time how they can reach out to you?
So for seller finance, manufactured housing, license 8670, winmobilehomes.com, 8 years in business, over 300 doors. That originated mobilemailboxmoney.com, where one investor can buy one note, whether hypothecated or a whole position, and start cash flowing in as little as a 30-day program at mobilemailboxmoney.com. Or if you find yourself blessed to be an accredited investor and you're looking for that, edge, that hedge at the end of the day outside the stock market, you're worried, you need an income, that's our 506c silvercrestopportunityfund.com. And if you have questions, don't hesitate to call today at 602-888-cash. We'd be happy to kind of walk you through and get you some comfortability. And then follow us on every platform at Mobile Mailbox Money, from YouTube, LinkedIn, Facebook, all the above.
Wow. Well, thank you so much. This was informative. It's always a pleasure. I always enjoy chatting and with you and your dad. Your dad's been in the business, what, 30 years? So,
Long time.
long time. So he's really mentored you in the right direction. And then you just took it with today's technology and went to another level. So you guys are doing a great job. Thank you so much for coming on. Okay.
Yeah, no, thank you, Mark.
Great. Thank you guys for listening to another episode of Real Estate Power Play. Again, if you like what you hear, please share, and we will post all the information below where you're listening to this, all the links, so you can reach out from there. Thank you guys so much.